Hello and welcome to CMS Forex News. I'm your market analyst, Nick Nassad. Today is Tuesday, December 30th, 2008. Starting with some fundamental data from the Eurozone, we see that money supply growth slowed in November. On the year, M3 money supply was up 7.8% compared to 8.7% in October. The annual rate of the growth of private loans slowed to 7.1% from 7.8%. In Switzerland, the UBS consumption indicator fell to 0.96, the lowest reading in 3.5 years. The heavy decline in November can be traced to a weakening of all 5 sub-indicators, pointing to weaker propensity to consume. German consumer prices were up 0.3% on the month in December, preliminary data showed today. That was lower than forecasts, but marks the first return to positive territory for the monthly rate in 4 months. The pace in the rise of annual prices slowed to 1.1%, putting the annual rate far below the threshold of 2%, which plays an important part in the deliberations of the ECB. The euro managed to pare some of its losses suffered yesterday against the Swiss franc. The pair established support at 1.4770 and climbed around 200 pips overnight. At around 1.50, the pair met a downward trend line and fell back in favor of the franc. The euro-dollar traded choppy today following the 400 pip down move in yesterday's session. The euro climbed 200 pips during the Asian session, sold down at the start of the European session, and then bought up again after testing the 1.40 level. By the middle of the New York session, the pair had retraced about 50% of yesterday's move. In the US, housing prices in major cities saw record annual declines in October. The Standard & Poor's Case-Shiller 20 City Index fell 18%, while the 10 City Index is down 19.1% on the year. The continuing fall in prices will act to constrain households as they see a major store of their wealth continue to deteriorate. Conditions are still not there for a rebound in the housing market despite the steep cuts in prices. As we saw last week, new and existing home sales figures plunged as buyers remain on the sidelines, or those wanting to purchase homes are finding it hard to finance lending from banks. In another piece of bad news for the U.S. economy, consumer confidence, as measured by the Conference Board, fell to an all-time low. The overall index plunged 6.9 points to 38 in December, with the present situation sub-index plummeting to 29.4 from 42.2. Those saying business conditions are bad and jobs are harder to find increased. In a final release from the U.S., the Chicago PMI saw a slight increase in December, surprising forecasts on the upside. Still, the small uptick follows a sharp drop that manifested in October. The prices paid sub-index fell 20 points, reflecting lower prices that companies can charge. Stocks in the U.S. brushed off the weak fundamental data and were up for the day. The Dow Jones Index hovered about 100 points higher on news the government would extend further bailout funds to GM's financial arm. After a rise in the pair in Asian trading, the pair fell back down to a new line of support at the 90 level. New York trading saw more consolidation. Yesterday we mentioned how the US dollar-Canadian dollar pair was caught in a consolidation wedge pattern. Today the pair broke out of it on the upside as the loonie was pressured by worries over demand for crude oil in this deepening global recession. The pair jumped 170 pips at the start of New York trading, but then managed to pare down most of those gains. It tested the trend line that had been resistance near the 1.22 level, and at least in the mid-afternoon New York trading, transformed into a level of support. The fundamental docket slows down again for the next session. There are only 2 significant releases. Tonight, Australia posts its measure of private sector credit, and tomorrow the US reveals its weekly jobless claims. And that's it for our show today. Thank you for joining us here at CMSFX.com, and happy trading.